Imagine if one country controlled the supply of a material so important that without it, electric vehicles couldn't run, wind turbines couldn't spin, advanced weapons couldn't operate, and even the robots of the future might never leave the factory floor. Now imagine that country is China. For decades, China has dominated one of the most important supply chains on Earth: rare earth elements. These materials are hidden inside smartphones, fighter jets, missiles, drones, electric vehicles, AI infrastructure, and next-generation robotics. And today, China controls roughly 85% to 90% of global rare earth refining and more than 90% of magnet production. That dependence has become a major national security concern for the United States. But one company is trying to change that. A company that owns the only large-scale rare earth mine in America and recently received massive support from the U.S. Department of Defense. That company is MP Materials. Today, we're diving deep into its history, why rare earths matter more than ever, and whether MP could become one of the most strategically important companies in America. Before we talk about MP Materials, we first need to understand why rare earth elements matter. Despite the name, rare earths aren't actually rare. The challenge is that economically viable deposits are uncommon, and separating these materials is extremely difficult, expensive, and environmentally complex. Rare earth elements are a group of 17 metals used in some of the world's most advanced technologies. Among them, two elements matter more than almost anything else: neodymium and praseodymium, commonly referred to as NdPr. These materials are used to produce neodymium magnet, commonly referred to as NdFeB, a chemical abbreviation for its three primary elements: neodymium, iron, and boron. These magnets are incredibly powerful, and they deliver the highest strength-to-weight ratio currently available. Without them, electric vehicles become less efficient, wind turbines generate less power, drones lose performance, robotics become heavier and more expensive, and advanced military systems become harder to build. Most people associate rare earth demand with electric vehicles, and that's true. A typical electric vehicle uses around 1 to 2 kilograms of rare earth magnets. But there is another demand driver emerging that could be even bigger: robotics. Companies like Tesla, Agility Robotics, and others are racing to build humanoid robots. Every robot contains motors, actuators, sensors, and motion control systems, all of which require powerful magnets. Some industry estimates suggest that humanoid robots could use several times more rare earth material than an electric vehicle. Then add warehouse automation, industrial robotics, drones, military systems, and AI-driven factories. Suddenly, rare earth demand is no longer just an electric vehicle story. It's becoming an AI infrastructure story. While investors focus on GPUs and data centers, many forget that physical AI requires physical materials, and rare earth magnets are one of those materials. The story of MP Materials actually began long before the company existed. In 1949, prospectors discovered the Mountain Pass deposit in California. Over the following decades, Mountain Pass became the world's leading rare earth producer. At one point, America was the dominant force in rare earth production. But things changed. China aggressively invested in the industry. Lower costs and state support allowed Chinese producers to gain market share. Over time, Mountain Pass lost competitiveness, production slowed, ownership changed several times, and eventually, the mine went bankrupt. By 2015, operations were largely idle. It looked like the end. Then, in 2017, a group led by James Litinsky acquired the assets out of bankruptcy for roughly $20 million. What followed was one of the most remarkable industrial turnarounds in recent American manufacturing history. To understand MP Materials, it's important to understand the rare earth value chain. There are three major stages. Stage 1, mining. Here the ore is extracted from the ground. Stage 2, separation and refining. In this stage, the rare earth elements are separated into individual products. And Stage 3, magnet manufacturing. Here, the refined materials are transformed into finished magnets. Historically, MP only participated in Stage 1. They mined the material and shipped concentrate to China. China performed the higher margin processing, produced the magnets, and captured most of the value. MP decided to change that. Instead of remaining a miner, management began building a vertically integrated rare earth company. Today, the company is expanding into oxide separation, metal production, alloy manufacturing, and magnet manufacturing. In other words, MP wants to capture value across the entire supply chain. This is where the story becomes extremely interesting. In 2025, MP Materials announced a landmark agreement with the U.S. Department of Defense. The deal was unlike anything previously seen in the rare earth industry. The agreement included a $400 million preferred equity investment, a long-term neodymium and praseodymium price floor, government support for heavy rare earth separation, long-term demand commitments, and funding support for additional magnet production facilities. Think about what this means. Commodity businesses usually face one major problem: price volatility. But MP now has government-backed support helping reduce that risk. The Department of Defense effectively signaled that domestic rare earth production is a strategic national priority, and MP sits at the center of that effort. The company is no longer just a mining company. It's becoming part of America's industrial strategy. Additionally, MP has already secured relationships with some of the world's most demanding companies. General Motors signed agreements for U.S.-made rare earth magnets used in electric vehicles, and Apple also committed $500 million to help scale domestic magnet production and recycling. This is important because companies like Apple don't take supply chain risks lightly. And for a company building new production facilities, knowing that future customers already exist is a huge advantage. Despite the opportunity, MP is far from risk-free. First, rare earth prices remain highly volatile, and if NdPr prices remain weak, profitability could stay under pressure. Second, execution risk is real. Building separation facilities, metallization capabilities, and automotive-grade magnet production is not easy. Any delays could impact future growth. Third, China remains the dominant player controlling most of the global supply chain. If Chinese producers aggressively lower prices, margins across the industry could suffer. Finally, MP continues investing heavily. Capital expenditures remain elevated, which means investors may need patience before seeing the full financial benefits. MP Materials is much more than a mining company. It represents an attempt to rebuild an entire strategic industry inside the United States. The company sits at the intersection of multiple long-term megatrends, and while competition from China remains intense, unlike most commodity producers, MP isn't simply digging materials out of the ground. It's building a complete mine-to-magnet ecosystem. The next few years will determine whether MP becomes a national champion or simply another mining company. Either way, it's one of the most fascinating industrial stories in the market today. If you enjoyed this video, smash that like button, subscribe, and turn on notifications so you never miss the next fundamentals breakdown. This is for educational purposes only and is not financial advice. Always do your own research before investing. Thanks for watching. I'll see you in the next one.